Find Oliver Slope with Blue Line Futures. Okay, Oliver, a couple of things I wrote down from your commentary this morning, but options was kind of a common theme through both corn and soybeans.
Yeah, we're always keeping a very close eye on the options market and starting to be a little bit more active with clients in the corn options. We still like the potential for upward mobility here for that March corn contract. We're right at significant resistance, 459.75 to 461. That was the lows from last February, which became the eventual breakdown point in June. So an inflection point. Looking back, if we're able to close out above here, potentially there's more upside momentum towards 470 to 473. But if you're a producer who's looking to protect price, we like using the options market to do that while keeping the upside open. And for soybeans, the past several weeks, I mean, you probably even say the better part of the last month, we've been talking about the potential for a contrarian play, noting that there's been a lot of bearish news baked into this market with regards to South American weather and potential production, as well as trade war talk. And we've talked about the potential that maybe there's upside risk if there's a reversion to any of those, meaning we get some less friendly weather in South America and maybe more friendly weather in terms of global trade. And we're starting to see some of those headlines kind of come to light here to start the first full week in what seems like a long time. So you're seeing some momentum in soybeans. I still think there's some upside there. 1020 to 1025 is going to be a massive hurdle to get out above. If we can do that, I think that we start to see some funds cover short positions and we can make a beeline towards those November highs near 1055.
You know, we talk about upside potential and optimism. Wheat market and the woodshed. I loved your comment on that this morning.
Yeah, it just gotten taken to the woodshed on Friday, new contract lows, but reversing back higher this morning. And I think you really nailed it. The cold weather working through the Midwest, certainly putting a little bit of risk premium back into the market. And if we're able to get above last week's highs, 554.75, I think that could really spur some additional momentum and short covering. And as mentioned with soybeans, there's just been so much bad news hanging over these grain markets that it wouldn't take much to maybe spark a little bit of short covering from a technical standpoint. I think that could be potentially what we're starting to see to start this week's trade.
Well, speaking of sparks, we'll add a little kindling as we take a break, and we'll talk about the fire that is cash and live cattle and feeder cattle as well. That's all ahead. Market Day Report continues in a moment. Weather month. Oliver Slopes with Blue Line Futures, and I talk about where we've been, but where we're going, some seasonal tendencies. Have you identified any of those tendencies in the cattle or hog markets?
Well, seasonally, we start to see a softer hog market. And, one thing that you and I have talked about and Scott and I have talked about for the last several weeks, specifically in the lean hog market, is the fund positioning, which got to a record high, and not just a record high, but a record high with some serious conviction. The old net long record for funds was about 100,000 contracts. Funds got as long as 130 contracts in the lean hog. So a lot of people on the same side of the boat. And once you start to see some of the fundamentals subside or even turn a little bit softer, like we saw in the hogs and pigs report, you start to see some long liquidation occur. And I think that's the trend that we've been seeing in lean hogs. And I wouldn't be surprised to see that continue to start the year. Now, the live cattle, feeder cattle market's a little bit different story seasonally, very friendly time of year. However, funds are building a pretty large net long position. They're not quite at a record in the live cattle market. They're darn close in the feeder cattle market. So that starts to raise some caution flags like we had noted in the lean hogs, where you get everyone on the same side of the boat and you run out of new bullish news to fuel the rally, you start to see some long liquidation. Now, I don't know that that's going to be happening here this week or next week, but again, it's a caution flag that's been risen, and if you've got downside prices to protect, I think this is a good opportunity to do so. And as we talked about in the grain segment, options are a great way to do that while keeping your upside open.
All right, Oliver, last one here for you. Any outside markets that have your attention to start the week?
Where do I start? We got another 5 minutes. The precious metals, the currencies, they've all been flying around. We've gotten some jawboning with regards to trade. Washington Post came out with a story, and then Trump walked that story back. So a lot of volatility in the outside markets. It should be an interesting start to the year for sure.
All right. Always good to see you. Oliver Slope, Blue Line Futures, and he's back on Thursday during the noon hour. I want to bring